Most people think silent quitting is about doing the bare minimum until you get fired. They're wrong. That's a losing game played by people with no leverage. The real silent quitting? It's a calculated, cold-blooded financial maneuver. It's the process of decoupling your time from your income so quietly that by the time your boss realizes you're gone, your bank account has already replaced your salary. Today, we aren't talking about quiet quitting your responsibilities. We're talking about the silent quitting financial plan, a blueprint to build a fortress around your lifestyle, exploit the tax code, and prepare an exit that isn't just a resignation, it's a liberation. We've been lied to. The standard American dream is a debt trap disguised as progress. You work 50 hours a week to pay for a house you're never in, to impress people you don't like, with money you haven't even kept yet. If you have one source of income, you are exactly one board meeting away from bankruptcy. That isn't security. That's a high-stakes gamble where you don't own the cards. Real wealth, the kind that allows for a silent exit, isn't about how much you make. It's about your burn rate versus your passive floor. Most professionals increase their spending as their salary grows. We call this lifestyle creep. It is the invisible chain that keeps you tethered to a desk you hate. Here is the hidden problem no one tells you. The harder you work, the more the system penalizes you. In the U.S., earned income, your salary, is the most heavily taxed form of wealth. Between federal income tax, FICA, and state taxes, you could be losing 40 to 50% of your labor before it even hits your pocket. Then, inflation eats the rest. If your money is sitting in a high-yield savings account at 4%, but real-world inflation is at 5%, you aren't saving. You're losing 1% of your life's work every single year. To silent quit, you have to stop thinking like an employee and start thinking like a sovereign wealth fund. You need to pivot from earned income to asset-based income. Step 1, the cash flow audit. For the next 30 days, you're going to track every cent. Not because we're cheap, but because we need to identify leaking capital. Every dollar you spend on a depreciating asset, that new car lease, the designer clothes, the $15 cocktails, is a brick in the wall of your own prison. We need to reach a 50% savings rate. It sounds extreme because it is. You can't escape a system by following its average rules. The tax-advantaged arbitrage. You must maximize your 401k, but not for the reason your HR department says. We use it for the immediate tax deduction. If you're in the 32% bracket, every $10,000 you put in saves you $3,200 in taxes today. That is an instant 32% return on your money. Next, the Backdoor Roth IRA. This is the secret weapon of the high earner. It allows you to shield your growth from the IRS forever. When you eventually exit, you want a bucket of money that the government can't touch. Step 3, the real estate anchor. You cannot retire on stocks alone. The volatility will break your spirit. You need hard assets, specifically cash-flowing real estate. By using leverage, low-interest debt, you can control an asset worth 5 times your initial investment. The tenants pay the mortgage, the IRS gives you depreciation write-offs, and you build equity while you sleep. This is the floor of your silent quit plan. Once your rental income covers your basic survival expenses, your boss loses all power over you. Now, we reach the execution phase, the silent exit. This isn't about being lazy at work. In fact, you should be hyper-efficient. Why? Because you need to buy back your time. Use the 90-90 rule. Spend the first 90 minutes of your day working on your own exit strategy before you even open your company email. Whether that's managing your portfolio, researching your next acquisition, or building a side consulting business. When your passive income reaches 100% of your expenses, you don't quit immediately. You wait until it reaches 120%. That 20% is your safety margin for market corrections. The day you walk into your manager's office to resign, it won't be an emotional outburst. It will be a professional, calm transaction. You aren't leaving because you're angry. You're leaving because you've outgrown the need for their permission. The system wants you to stay loud, stay angry, and stay broke. The silent quitting financial plan is the only way out. It's time to stop working for money and start making money work for you. And if you're serious about your financial sovereignty, hit the subscribe button. I'll see you at the exit.